If you just checked your portfolio and you've lost some money, then you need to learn this one simple concept that once you've implemented it is going to change your entire view of the stock market. If you give me about 5 minutes of your time, I'm going to walk you through probably the most important thing you're ever going to learn about the markets. Okay, this is the thing that can turn a losing portfolio into a winning one. This is the one conceptual difference. It's that important. Now, most investors have absolutely no idea where the point of maximum financial risk is, and they're normally buying there. And they have no idea where the point of maximum financial gain is, and they're normally selling there. Okay? That's completely backwards. I'm going to show you why, and I'm going to show you how to fix it. Now, there's a graph and a cheat sheet that goes along with this video. I'm going to drop it down in the description and in the comments. You can go there, put in your email address, and I will email it to you completely for free. It's a great cheat sheet to have. You can have it right there next to you where you're trying to invest, and you're going to remember this lesson, which is probably, like I say, the most important lesson you could possibly learn about the stock market. So I'm Anthony Garcia. I'm a full-time trader, investor, money manager, and stock and economic analyst. I'm here to help people like you, the do-it-yourself investor, learn how to turn your portfolio around and create consistent winners. Okay, I have no fluff, no bias, no BS, just results. Now, let's get into the big reason why most investors lose money instead of making it. So here is the wild ride that way too many investors find themselves on. Okay, now as a stock price rockets upwards, it's like the whole market's throwing a party. Everybody's celebrating. It's all over the news channels. Jim Cramer's talking about it. Your friends are talking about it, okay? That's here at the beginning of the roller coaster, all right? So this is your stock price rising. And here you have all sorts of emotions. Happy, right? You're too happy. Up here you're elated with your gains. But the problem is that right here at the top, your money is teetering on a precipice, okay, that's only supported by emotion and not supported by the underlying fundamentals of the stock. I call this point the point of maximum financial risk. Right here at the top, okay? Max risk. This point is where people are buying just out of emotion and not out of any sort of underlying fundamental. So it's kind of like buying a balloon for $100 just because it's floating higher. Balloon, string, it's a really bad balloon, and it costs $100. Who would buy a balloon for $100 just because it's floating higher? Okay, I mean, maybe people that have hot air balloons, but you get my point. Now let's ride the roller coaster down. As the price drops, investors start to panic. Okay, so we have, as it just starts to go here, we're still a little hopeful. All right, we're not panicking yet. We're still a little hopeful. Okay, we'll go down a little bit further, further. Panic sets in somewhere about here. Hey folks, this is Anthony. Sorry to interrupt this, but if this is helpful to you and you want to hear more content like this, please consider giving me a like and a follow. It really helps out. Thank you. And now, back to the content. That's panic, okay? And when people are panicking, it's not yet time to buy. What you want is complete and utter capitulation and depression. My grandfather used to call this when the blood is running in the streets. That's when you buy. Okay? We come down here. This is where people have capitulation, and then finally, depression. This is where somebody says, I'm never doing this again. I'm never buying stocks again. I'm going to go hire a financial advisor to do it for me. That's where you want to buy. This point is the point of maximum financial gain. Max gain. This point, point of maximum financial gain is where the smart and savvy investor steps in. They see the potential in the stock, and they understand that the emotional roller coaster is the only thing driving prices right at the moment. So when they see it down, all the way down in price, the blood is running in the streets, that is when the savvy investor buys. Now here's the real kicker. You guys have probably heard this before. Buy low, sell high. That's investing 101, right? Everybody's heard that. Everybody knows it. But I mean, the amount of times that I've heard people say that and then they go and they buy high and sell low, just like this roller coaster shows you, I'd probably have enough pennies to buy a private island. Not a very big one, but it would be a private one. Now, the next time you find yourself buying into hype or selling off in a panic, you need to ask yourself, where are you on this emotional roller coaster? Are you here at the point of maximum gain, or are you here at the point of maximum risk? You need to know, okay? Now, as I said before, there's a link down in the comments or in the description that will take you to a free cheat sheet that I made for this. And you can get the exact graph that's coming in my book, Investing Isn't Complicated. And it walks you through this. It's a beautiful cheat sheet. You can always have it there when you're going to invest so you never forget. Remember, investing isn't a wild ride, or it shouldn't be. Anyway, if you're on a ride like this, then you're doing it wrong. Now, that's okay. It's not really your fault. Just a lot of people don't understand this, and it's one of the key fundamentals to proper investing. So what you can do now that you do understand it is you can step back, watch other people ride that roller coaster, and you can buy when they panic out. And you can sell to them when they are elated about a stock because you bought it before.